If Elon's Twitter feed is any hint of what is going to happen to the short sellers, well, like Elon says, he is the destroyer of shorts. What does he mean by this? What kind of cryptic message is he sending? He makes a couple other tweets that are interesting and that you should know as Tesla investors. We're going to get into it, as well as what's the current situation look like with the shorts? How vulnerable are they? Again, something that you want to hear if you're a Tesla investor. Let's get into it. Hit the like button and subscribe to the channel only if you want to stay up to date with everything going on with Tesla stock every single day, as well as the broader markets. On February 4th, 2021, Elon tweeted, he said, quote, "I am become meme, destroyer of shorts." And then just on Sunday, he said, "And they keep coming back for more. ... If that's not a cryptic message, I don't know what else is. Elon Musk also just responded to this meme that says life is like a game of chess. I don't know how to play chess. Elon said chess is such a simple game. Maybe this one isn't as cryptic, but this would be a direct reference to Dan Ives. As Dan Ives has said, Tesla and Elon are playing chess while others are playing checkers. Probably some form of cryptic message. That's what Elon likes to specialize in. Now, what's the short position currently look like with Tesla stock? But first, I think this one is just comical. This is the journey of Elon Musk. In the 90s, he sold PCs in his college dorm. 1995, starts Zip2, sold to Compact. Starts X, becomes PayPal in 1999, starts SpaceX in 2002, invests in Tesla. Elon commented and said, "You have the invest in Tesla wrong. Do I look like Warren fucking Buffett to you?" He is going off the rails on Twitter, and it's quite comical. Go ahead and read some of his recent tweets. A lot of them are quite cryptic and just at the very least will give you a good laugh. The dollar amount currently sold short in Tesla is sitting at $25.18 billion. This is up 64% in the last 3 months. Now, this is a massive number, and short sellers have lost more money in 2023 than they lost in 2021. In fact, when Elon made this original tweet, February 4th of 2021, the losses you are seeing today are so much larger than the losses you've seen in 2021. For context, during 2021, short sellers lost about $10 billion. Today, short seller losses are over $16 billion. That is because a lot of your shorts got in at really low prices. The bears thought they had everything figured out, and they thought Tesla stock would continue to fall after Tesla hit that low in January of about $100 per share. Everyone was shorting Tesla during this fall, and especially that drop from about the 195 level back here in November and December of 2022. They were shorting aggressively in the last final weeks before the bottom, and then ultimately on the reversal as well. Most shorts took out short positions between 120 and 150. That's where you actually see the amount of shares start to jump quite a bit from about 60 million shares sold short to where we currently sit at about 96 million shares sold short. Short sellers have indeed lost their asses betting against Tesla in 2023. And I don't think this is the end of the short seller losses, as Elon somewhat is predicting here in this cryptic tweet. But as of lately, we have gotten Tesla's earnings, and Tesla's earnings were great. They were phenomenal. They were better than expectations across the board. Auto gross margins better than expectations. Revenue, EPS, your year-over-year growth rates, your quarter-over-quarter sequential growth rates were better than expectations. Everything was better than what you could have expected, or what analysts were expecting, shall I say. earnings were kind of in line with what we expected here on this channel. Well, something that Elon said on the earnings call has caused the stock to fall, and I'm sure you know what it is. Elon said that maybe they would cut prices in the future, just depending how the course of interest rates went and how the economy chugged along from here. This sold off Tesla stock from about $300 per share to $260. And I don't think Elon is a dumb guy, clearly. I think he knows exactly what he's doing. Exactly what he's doing. He wanted to create just enough uncertainty to make Tesla stock fall a little bit, to lower expectations dramatically, in which he succeeded in that. He said production could slow down because the Cybertruck kind of tools and assembly lines are being built in bigger numbers now. It could slow down the cars that are being built, which makes sense. Again, created a level of uncertainty, created a level of doubt that maybe Tesla does not, get to the amount of vehicles they want to sell. Maybe margins fall even more because Tesla will have to cut prices. That was no accident, and I'll be the first to say it. Elon does not need media training, as a lot of you guys think he does. He did this for a reason. He did this to lower expectations, to ultimately crush those expectations on the next earnings call. This is a big move, right? This is massively positive. If you can lower expectations after Tesla stock has rallied 150% in 2023 and lower expectations to a tune of causing the stock to sell off 10 or 15% rather than outright just crush the stock, trying to beat expectations next quarter, that's a lot better of a move, right? A smaller drop's going to be better. Ultimately, the stock's going to go higher. So this was planned from Elon. Something I would also like you guys to consider here in the short term over the next couple of weeks is some of the option activity that we are still seeing on Tesla stock. Even though the stock has fallen, this is not a moment where hedge funds and institutions are loading up on puts. They're actually loading up on those calls. The 260 call has open interest of 46,000 and seen volume on Friday of about 7,000. The $300 call has open interest of 20,000 and seen volume of almost 15,000 on Friday. The total volume on the call side was 64% on Friday, and the volume on the put side was 36%. Almost a 2-to-1 ratio. Every, position that's being initiated, 2 of them are calls to 1 put. So it looks like your hedge funds institutions are actually quite bullish on Tesla. And when you look at something like December 15th, same story. You're getting a lot more of the calls that are being bought than the puts. And a matter of fact, the analyst as well. We've talked about this many times before. The analyst, well, they haven't lowered their price targets, not a single one of them. Even your bearish analysts have risen their price targets recently. I think this is being clouded by what's happened with the actual price action of Tesla stock. I don't think this has as much to do with Tesla's earnings or the earnings call to what it has to do with what's going to be coming this week. Starting off this week, you're going to get the NASDAQ rebalancing on Monday, big tech earnings such as Microsoft and Google on Tuesday, Fed Jerome Powell on Wednesday, which could be a massive bullish catalyst for Tesla. If you have not seen the last video, definitely go watch that. And then you have GDP on Thursday, as well as PCE on Friday. This is what I would call an epic shit show of a week. Potentially. If things are bad, well, you definitely have a lot of catalysts for things to go bad. It's not like you have one event this week. You have multiple different things that could be negative, or to the contrary, could be quite positive. Personally, I think the sell-off in Tesla stock is over unless we see the broader markets fall. And I know a lot of people are saying $200 per share or Tesla's going to fall under even 200. That's not going to happen unless the markets are in a world of pain. If the S&P and the Nasdaq fall 15-20% from here, I mean, Tesla, yeah, sure, it could fall 25%. It could fall to $200 per share. But unless you're willing to make that bet, then it doesn't look likely Tesla's going to fall to 200 either. As far as Tesla stock specifically in regards to the short positions we're currently seeing coming on the next earnings or even at any time, there could be one big catalyst that could send Tesla to all-time highs. It doesn't have to be next earnings. I have a feeling Elon lowered expectations to massively beat them next earnings to give us a lot of good news and to really crush the shorts. So if I were to bet on something more solid, it's going to be next earnings are going to be very positive, and we're going to hear some very good things. But at any moment, if Tesla announces they're going to be licensing full self-driving to something like a Ford or a GM or Toyota in even 2025, well, that's going to add so much profits to Tesla's bottom line that the stock would likely hit all-time highs within just a matter of weeks. And a lot of this would be fueled by that $25 billion that is sold short in Tesla. For context, $25 billion is double, 2x the amount of Tesla stock retail investors bought in 2022, and it is more than the amount of stock that Elon sold to buy Twitter in 2022. 25 billion is a massive number. And when shorts are sitting on losses of this scale, when it looks like Tesla's not going back to those levels, then it doesn't become a question of, are we going to be profitable in this short trade? It becomes a bigger kind of question is, when should we cover to minimize potential losses? Like, do we start to cover now because the stock's almost $50 off the high that we seen before earnings? Or do we wait until it falls to maybe 240? There's not a lot of that downside left to make that decision before I think Tesla ultimately sees that upside move. Keep in mind, Fed Jerome Powell on Wednesday is going to be massive. Because why? A lot of people were confused on the last video, so I want to break it down a little simpler. In this market, in 2023, heading into 2024, there's like a 50% chance we go into a recession. Odds are, and the consensus view is, it would be shallow, it would be short-lived, it would be something that would be very manageable. Well, in that environment, there's still a degree of uncertainty. It could be deep, it could be large. We still don't know. There's a lot of uncertainty around the broad economy. So investors in 2023 have been buying, for the majority of 2023, Apple's, Microsoft's, your tech names that are cash beasts, that have $100 billion cash reserves, that are very stable companies, that are service companies, that are not gonna, get hurt the same way during a recession or just during normal market times. There's a lot of safety in those two names specifically, and that's why they're at all-time highs. And a big reason why investors have been in those stocks, it's not because they expect huge returns. It's not because they're investing, for great things to come necessarily. It's for the degree of safety in an uncertain economic environment. Now, as the Fed on Wednesday, I believe, will signal that they're going to pause for a long time. Well, the markets are going to start to say, hey, the Fed's going to pause, and then they're going to start cutting rates. We should buy your quality high-growth stocks. And there's not a lot of them out there. Tesla, I think, fits the bill of a quality high-growth stock. And Tesla is a more kind of stable company. It's going to do over $100 billion of revenue in 2023. There's not a lot of companies that do over $100 billion of revenue in a year that are growing at 40 or 50%. That would be a stable company by anyone's definition. I don't think we could argue that. They're also in the financing sector, which should benefit on lower rates. These are great reasons why Tesla should see some inflows, not to mention earnings were actually very good And if we expect lower rates to come, there's a slighter chance that Tesla will need to cut prices as affordability comes down on Teslas. That's something Elon said on the last earnings call, that as rates go higher, even if you cut prices, the affordability of vehicles still goes up or still goes down, right? Vehicles are still more expensive to finance if you cut prices, but interest rates go higher. So if interest rates go lower, they're not going to have to cut prices so much because that monthly payment is going to remain stable, if not even start to fall. So these things are very positive in the short term, potentially even this week. I think in the next quarter or two, or really at any time, if we get news of licensing full self-driving, the shorts are screwed. And I think Elon is telling you this in a way that he actually can. Obviously, Elon's not allowed to say certain things because, I mean, he gets sued all the time and his tweets are a big topic of him getting sued. He's gotten sued on just because of its tweets so many times before. But this is a clear message, especially the ... I find quite telling. Let me know what you think about this down below in the comment section. Hit the like button as well as subscribe to the channel if you want to stay up to date with everything happening with Tesla as well as the broader markets this week and beyond. Thank you for doing it. That is it. Enjoy the rest of your day, and I will see you in the next one.